What's going on, guys? What's going on, traders? How are you doing? I hope you were having a good week and you were profitable. This is ShocksCapital FX. Welcome back to the channel. If you are new here, guys, we talk about ICT, we talk about order blocks, we talk about institutional trading. But today we are going to be talking about order blocks and the best order blocks to trade. All you need to know about the order blocks. So, as you might know, as you might not know, we don't trade all the order blocks we see on our chart. We don't trade everything. So we have to be choosy about the order blocks which we are going to trade, about the demand zones which we are going to trade, about the supply zones which we are going to trade. We are not trading everything we see on the charts. So today I'm going to be showing you what we should be trading. So before we go any further, guys, I don't want to mislead you. What I'm going to be talking about here, it's not a holy grail. You will lose with this, with all the conditions, with all the everything on the checklist you look for. You are going to lose anyway. So this is only going to increase the odds. This is only going to increase your chances of winning your trades. So the order blocks we are going to be talking about are order blocks which are in line with the market structure. So you know, market structure always comes first. So with market structure, we're going to be looking at what order blocks can we trade, what order blocks can we not trade, what order blocks to avoid, and what we need to see price doing before we take any trades, before we do anything stupid. Okay, so this is the beginning of the day for this chart. This is volatility 75 M5 chart. I love the M5. So this is the M5 and this is what we are having here. Okay, so let's look at this and you will see that we are having price moving up, price moving down, price doing everything it's doing. Okay, so let's look at this one first. So from this price, after day opening, we had this consolidation, then breakout of price, then price started showing us its hand. So when this point here broke, when this high was broken by this move, this is an aggressive move. You know, I want to see aggressive moves from my order block. So this is an aggressive move that breaks what? The structure. So when this structure breaks, we were expecting price to come back to this order block, right, and move away from it. So our trades are going to be happening in this area. So what we have to do in this area is we have to see how price got back to that area, how price got back to the order block. So we don't want a situation where price just gets back like something like this. We have this order block, then price gets back perpendicularly like this. We want to see price taking its time to get back to the order block, and when it does, we will be waiting with our guns at that order block to shoot. So what I want to see is I want to see price accumulating back to the order block. I don't want to see price coming back straight up to the order block like this, like just one move. Like you see the aggressive move which we want price to leave the order block. That's number one. How does price left the order block? How did price left the order block? So price leaves the order block like this with a very good perpendicular move away from the order block. So that's number one. So after that has been established, we want to see how price is getting back to that order block, how price is getting back to retest. What is happening for the retest? How is price moving? So we don't want to see price getting back with an aggressive move like this. So this is an aggressive move we want to see from the order block, but to the order block we want to see accumulation. We want to see price taking its time to get back to the order block. So we want to see what we call accumulation back to the order block. Like in this case, you see price moves up towards the order block, didn't retest, goes up, goes down, up, down, down. So this type of accumulation which you see in this area is the type of movement we want to see price doing before it gets to an order block. And I want to give you an example on this chart where price moved aggressively to an order block. So if you look at in this chart, you see that we have a break of market structure here and an aggressive move from this OB. So you could have marked this order block and expected price to bounce back from this, but you will see that with this movement, with this momentum, price was coming towards the order block for a retest, but with this momentum, price did not respect this order block. Why? Because it was moving aggressively towards the what? The order block. We don't want price to move like that. We want price to move in a consolidation or accumulating back to the what? To the order block, because the whole idea with order blocks is we are having unfilled orders at the order block, right? We're having unfilled orders at this one, at this order block. So what happens is we are waiting for price to get back to this order block so that we can fill more orders. So what we are eventually saying is this price movement back to the order block is only retail traders. It's only us, guys. The banks and the institutions are not involved in this move back to the order block. They want to be involved here at the order block. Why? Because we are saying when this market breaks or when this price moves away from everything, the banks are taking their profits. Where we are seeing these retracements are taking their profits here. So this, it's only us fighting for price to get back to this. Then the final push is done, where price then gets back to the order block and moves away. So this is what we want. We don't want the institutions being involved back to this, because when the institutions are involved, the orders here are going to be filled, but the orders from above or from this move are going to be more than the orders which are unfilled in this area. So memorize it. We want to see price getting back gradually. We want to see price getting back with the accumulation. We don't want to see price getting back aggressively to the what? To the order blocks. That's why you see this order block not holding. Why? Because price came back aggressively to this what? To this order block. You want to see order blocks coming back with some pauses in price. You don't want to see an aggressive. See what happened. The price moved up, down, up, down, up, then finally retested this supply zone we see here. So this is what we want to see. No quick movements. No what? We want to see gradual moves to the what? To the order block. You see this? You see this accumulation. So this is where you can be seeing your what? Your patterns. You can be seeing your flags. You can be seeing your triangles. You can be seeing everything. This is the accumulation. So what we are saying is the market makers are trapping back to the what? To the supply zone, to the order block. So when you see this, you know this order block is going to be high probability setup. It's going to be a high probability setup. Plus the other thing, your order block should break a channel. So you see this trend line, right? So this is more like a channel when price is moving up. Then we unleash this order block, price moves down, breaking this channel. So this aggressive move should break structure. That's number one. We're breaking structure, but it should also break some kind of a channel which we are having here. So we are having 1, 2, 3 touches and we are creating some kind of a channel here. So when price moves from the order block, it breaks a channel, it breaks the market structure, then moves gradually or consolidates back to the what? To this order block, responsible for these breaks, responsible for these breaks of what? Of market structure. So we will know that your order block is what? Is strong. So for the order blocks, again, we don't want to be seeing order blocks like this in this case. You see, we don't want to see order blocks like this. You see these dodges in this area. You want to see a full grown up a full grown up candle like this. You want to see a full candle. If these dodges have caused this, you are going to ignore it. They are weak order blocks. You want to see this order block. Plus this other thing, there's this other thing people, my students, struggle with. They mark their order blocks like this. This is a channel going up. So let's say these are order blocks. You are marking going up, going up, going up. Then you see market breaking this low and you are expecting these order blocks to hold. No, my friend, these order blocks are not going to hold, because now we are in a downtrend. We are in a downtrend, my friend. We are in a downtrend. So we expect these order blocks to hold while least we are still in an uptrend. when we break this law, like this, we are expecting these order blocks which were holding when we were in an uptrend to what? To not hold, to be broken. This is what we are expecting. Why? Because we are now in a downtrend. So when we are uptrending, we expect these ones to hold, but when we are downtrending, we expect these ones to break. So this is what we are doing. When market breaks, don't expect price to be held by these order blocks. They are just going to be held for you to have a retracement back to a valid order block. A valid order block is an order block in line with market structure. When market structure is moving like this, so this is a what? This is an uptrend. So this is an uptrend. You see market structure is trending up, and you expect a bearish order block to hold your price like that. No, my friend, that cannot happen. We are in an uptrend, use bullish order blocks. You are in a downtrend, use bearish order blocks. Let's look at something. So this is GU, this is GBP USD. We have broken market structure here aggressively, and we have also broken this market structure here. So we have marked this order block. Why? Because it's the last down candle before this break. So what we are expecting, price to bounce back from this order block. But why broke here? It broke the what? The order block. Why? Because the move which came for the retest is aggressive. This is not consolidation. You want to see consolidation. You want to see accumulation back to the what? To the order block. You want to see price accumulating, price taking its time to get back to what? To an order block. Like let's look at this. This is not a perfect example, but you see price did not come with a sharp move back to the order block, but it was kind of consolidating. So that is what you want to see in your order blocks. You want to see price taking its time to get back to retest and an order block. So you see what happened here. This all is accumulation back to the what? Back to the order block. You see, this is all accumulation back to the order block. These are the types of order blocks you want to be taking, and look at the move that came from this order block. So number one, I said we need to see break of structure. That's break of structure. Then after that, you need to see price coming to retest an order block or going for a retest in an accumulation like this. This is what you want to see, and this is what you are looking for as an order block in market structure trader. So you are not taking all the order blocks. You are not taking every order block. You are only taking high probability order blocks. That's why you see I'm just scrolling and looking for best order blocks, and this is a best order block. Why? Because number one, we see price breaking structure. That's number one. You see these structures being broken. This break of these structures tell us that we are in an uptrend, and this order block is very strong. Why? Because you see price getting back to that order block with what? With accumulation. This is what you want to be seeing from your trading. Then this will be what you take profit from here. So guys, this is how you should be trading order blocks, not trading every order block you see on a chart. Not trading every order block you see on a chart. Order block, retest. This was very weak. Why? Because number one, this was a doji. Number two, this was not fresh. Number three, it wasn't original either. So you are looking for fresh order blocks. What do I mean? You are looking for order blocks that haven't been retested. You are looking to trade the first retest. This is not a trend line trading where you want to see two touches and you go in for the third touch. No, here with order blocks we go in for the second touch. For the first touch. We don't wait for the second, not for the third, not for the fourth. If you don't know this, you can't be my friend. So my friend, you need to trade order blocks the first time. You need to trade order blocks the first time. This is an order block, break structure, comes back for the first time. This is not your trade. This is not your trade. This is not the first time. You need the first timers. So let's look at a good example of the first time trades which we are talking about and which we are trying to avoid. Oh, you see what happened here. So this is the first time this order block was retested. This is your trade. This you are not involved. Why? Because this is not a fresh order block. You need an order block that's not been retested. This one, order block, very good order block, first touch. That's you. That's where you are doing business right there. That's where you want to get in. That's where you want to bet your money there. If it's a second retest, third retest, you are not looking to be involved in such a trade. You are not looking to be involved in such a trade. So number one, let's just recap. Number one, we are looking at market structure. What is our market structure telling us? Number two, we are looking at the freshness of the OB. Number three, we are looking at how did price leave that OB. So you don't want order blocks where you are having price taking its time at that. You see this movement. This is the type of movement you want to avoid. You know what? In your trading, you don't want to see price moving like this. You want to see straight drops, straight rises, straight drops, straight rises from what? From your zones. So this is crap. You don't want to be involved in this. This is crap. And if you see yourself marking order blocks in this area, shame on you, my friend. Don't do that. We can't be friends. If you want to be friends with me, you mark very clear order blocks. You mark very clear order blocks, as I am telling you. So that's number two. Number three, want to see price taking its time to get back to the order block which you would have marked. Number three, you want to see what number are we on? Are we on number three, number four? Okay, let's just say the next one is you want to see price breaking either market structure or a channel before you get involved. So get your notebook out, write down these elements, write down these conditions and stick them to your wall, and you can be looking at them whenever you want to be taking a trade. Ask yourself, is this order block fresh? Is this order block strong? Is it broken market structure? Is it broken a channel? How is price getting back to it? Something like that. Oh guys, I hope this was very helpful to you. I hope to see you in the next video. Thank you for watching.